Hello and welcome to another episode of the Investor Financing Podcast. Today's show is all about crowdfunding, and it's kind of an interesting topic because I don't know much in the space other than I've made a few investments through crowdfunding platforms, and we have the founder and CEO of a company that specifically does crowdfunding portal for real estate, which is very exciting because this show is all geared about real estate and business ownership. So this is a great way to diversify. It looks like when I was viewing the portal or the website, you can get started as little as $1,000. So it's really kind of what my take is on the Reg CF, which is the regulation for crowdfunding, is that it's opening up the playing field for non-accredited and accredited investors to basically build a portfolio of smaller investments across the board of lots of investments. So I could take $30,000 and invest in 30 different assets, $1,000 each, and I'm basically creating kind of a, I don't like to use the word mutual fund, but I'm creating my own mutual fund where I'm the kind of advisor and I'm picking the operators and the deals that I want to get into. So, Levi, welcome to the show. Did I say it right this time?
Levi.
Levi. I don't know why that's so hard for me to say. Levi. Okay, Levi. Pleasure to meet you here on the show. Thanks for joining us. And anyways, can you walk us through this portal and exactly like how you came to founding this company and what the future holds for this company?
Yeah, I mean, I start from the beginning, which is I was brought up in London, England, family one of nine. My father was a chemist. He had a PhD in chemistry. And on a chemist's salary, we never had much money around. I always like to say that in my house, the solution to a threadbare carpet was a rug. And so the refrain I heard most often was, "We can't afford it." And I would go to the synagogue and I would see people show up in their Jaguars and their BMWs, and they were building themselves nice homes. And I couldn't figure out, like, why is it that these guys have so much money and we don't? And over time, I realized that my father just didn't have access. He was plenty intelligent. He had a PhD. He just didn't have access to the kind of deals these other people had access to. They had access to deals which made them money. And my father was just a salaried guy who had a big family, and therefore there was never much money around. And this is kind of like, when I think about like access to deals, and I think about the fact that the wealthy can get wealthier, by having access to high yield deals, it just kind of, it's a sense of iniquity that I have. And I want to kind of fix that. And it really came into focus in 2019 when I was looking to buy a home here in Connecticut. So I had some real estate in Colorado and moved to Connecticut for a job with Priceline. I was an executive at Priceline. And I was looking to buy the house which I was renting. And that house, it was worth probably about $400,000 at the time. And the landlord, he knew how much I was earning because I had disclosed that to him when I was renting. He wanted $450,000 for it, which at the time was too much. So I looked and I said, why don't I share the risk with somebody? And I went and looked to see would someone else buy some equity? And it turns out there are some companies which will buy equity in your home. I won't give advertising for them right now because I'm about to say something about them which they might not appreciate. Because when I dug into the numbers of what it would cost me to have them as a co-investor in the house alongside me, and turned that into an APR, an annual percentage rate, it ended up being in the 30s, right? And that was when interest rates were down like close to, 2%, 1%. So I just thought my sense of iniquity kind of grew even larger there. Like, these are people, trying to invest in real estate on the backs of the small guy. And I just feel the small guy never gets a look in. So real estate is this cash flowing asset. It's an asset which, you can build a generational wealth on, and it should be available to everybody, not just to accredited investors or the wealthy. And so I started building this platform with the goal of creating a marketplace where anyone who owns real estate should be able to offer some investment opportunity to other people, and anyone who wants to invest in real estate passively should be able to go on the marketplace and do so.
And what kind of deals are you starting to see on the platform, and what deals do you envision that will be there?
So, so that's the second part of your question, right? Where does it go, right? Where it goes is the goal is very, very broad. So if you think about, as a vertical only real estate, but all types of real estate, right? So in other words, the way you present it was really kind of, I couldn't present it any better, which is basically you should be able to go on there, browse through, and basically pick your different. You want a little bit of. So the first deal we have up are 4 single family homes in North Carolina. Right. By the way, institutions own 40,000 single family residents in North Carolina, which is for rent. 40,000 is like a massive market. And so those are big institutions, Blackstone or BlackRock, and a bunch of others which own those homes. And here, individual investors can get in on the action. But the second one, which which is gonna go up there, is a mobile home park. So it'll be all types of real estate. You can go, you want a little bit of mobile home park, you want a little bit of office space, you want a little bit of residential real estate. Maybe you want some owner-occupied residential real estate as well. We'll have that up there too. That's not a bad investment because the homeowner takes care of it, right? So there'll be all types.
Would you be getting like a K1, just like you would on a regular real estate syndication?
Yeah. So if there's cash flow, and mostly there'll be cash flow when it's a rental property, then you'll get your K1s. If there's no cash flow, then there won't be a K1.
So if it was like a flip type of deal where it's vacant and they're just going in and fixing it and then turning it and putting it on the market and selling.
Then you would get the money out and the time when it appreciates. Or I can see, like, if you invest in a single family owner occupied home, which the owner is selling some equity, if the property was in an LLC, then they're not offering you cash flow potentially. So when they sell or when there's an equity event or refinance, then you would get paid out. So it just depends on what the deal is, deal by deal. But if there's cash flow, you'll get a K1.
Got it. Yeah. I mean, this is, I had told you earlier that I had invested in like a coffee shop through a crowdfunding platform. And I really enjoy it because you don't need a ton of money. It's in the two companies I've invested in on these crowdfunding platforms, I kind of believed in what they were doing, obviously. Now, like what you're doing is specific to real estate, which is kind of like what I've done for 20 years. So it's more interesting for me because like I can see, okay, what's the strategy? What are they doing? I can read through I can log in, I can set up an account. I log in, I can see all the documents and like what their projections and their financials. I can see the PPM, the private placement memorandum, all the things that go around. Can you kind of address what Reg CF is and like when that came to be and what's that doing to the syndication world per se?
So let's start off with comparing it to other things. Maybe start off talking about what securities are, because a lot of people don't realize what a security is. So really, security is based on this thing called the Howey's Law, or the Howey's Rule, which was passed by the Supreme Court, or I don't know, I think in the 1930s or 40s, quite a while ago. And it defines a security as basically an investment in a joint enterprise where the expectations of profits are going to be as a result of the efforts of others. So in other words, if you invest in Google, you invest in, any publicly traded company, then you're not expected to show up to work there. You just basically whatever the stock price goes up, and especially if there's a dividend, then it's definitely the efforts of others. And real estate is the same way. As an LP, you are a limited partner, which means that you're not expected to show up to work. You're not expected to do any management in the deal, but you'll get cash flow, you'll get profits. So it's the definition of a security. So whenever you are offering securities, you have to register the securities with the SEC, which is a very onerous process. It's called an IPO, unless you use an exception. So there are certain exceptions written into the law, which says if in this scenario, you don't have to register security with the SEC. And they're basically, for real estate, there are two scenarios which everyone uses. One is a 506B and one is a 506C. And I'm sure your listeners who are doing offerings are familiar with both of these. And a 506C basically says, you can do advertising, but it has to only be accredited investors, and you have to verify and use a third-party company or service which verifies that the person's accredited. And then 506B says you can't do any kind of advertising, and you're allowed to have 35 sophisticated non-accredited investors, and all the rest have to be accredited. So you can't advertise. People have to know you first, and they have to actually approach you. Can I invest in this deal? But then there's a Reg CF, which that came into, with the Jobs Act, and in 2015 it came into law, and that says that you can raise money from anybody and have unlimited amounts of investors, and you can advertise to a limited degree, but it has to be done through either a funding portal, which is registered with the SEC and a member of FINRA, or a broker dealer. So as long as the fund is done through a funding portal, then you can raise from the public. Now, that was $1 million, actually $1,070,000 was the limit up until March of 2021, when they raised the limit that you can raise up to $5 million in any 12-month period. So up till March of 2021, it really wasn't relevant so much for real estate, especially bigger real estate deals, because $1 million just wasn't enough. But now that the level is up to $5 million a year, it becomes much more relevant for real estate, and you can actually raise for decent sized deals using Reg CF.
So let's say I had an apartment building under contract, and I put it in the portal as I was going to be the GP, the sponsor, and it was, I don't know, let's just throw it out there. It was like a $10 million acquisition price.
Yep.
And I was getting $7 million from the bank, and I needed to raise $4 million for CapEx and down payment. Yep. I could raise $4 million on your platform eventually.
Yes.
Because I can raise on any single deal or syndication, you can raise up to $5 million.
It goes all the way up to the sponsors. So the sponsors themselves, the individuals, can only raise $5 million a year using Reg CF.
Okay, got it. So
period.
Collectively, I could raise $5 million for any given project, whether it be one project or 10. Exactly.
Over the course of 12 months. So after it's a rolling 12 months. So as long as you haven't done it, $5 million in the last, you're good.
Yeah. So I could do $5 million a year raise, and as long as it's specified that I'm going to be getting debt, senior debt, which is typical, then that's fine, and I can leverage and I can buy bigger projects this way. Exactly,
that's the whole goal. Yeah, and we are probably the only ones really bringing net new capital on the market, because I was talking to some guys about this who really are in the space of accredited investors. Accredited investors is such a crowded market. So many people are after accredited investor money. If you're accredited, you're inundated with ads. I know it because whatever application I open up, some ad is trying to sell me on some kind of real estate deal. But for non-accredited investors, like, they don't really have a look in. So this is like, we're the first for non-accredited investors, and we have a very, very ambitious goal of where we want to go with this. We want to build like the eBay, but for real estate. eBay ages me. I know people, the Amazon, whatever, for real estate investing. That basically, if you want to look for a deal and you're just anybody, you're not accredited, this is the place to do it. And you can, as you said, build your real estate portfolio over time.
Well, even if they're accredited, it doesn't mean, like, if there's deals and not everybody wants to put 50 or 100K in one deal, right? They might want to put in 10K or 15.
That's a fantastic point. And why, if you have $100,000, why not diversify that over a bunch of deals, even if you're not 100 deals, and, pick a bit of this, pick of that, and all across the country, right? You can do it. You do $5,000 in North Carolina, $5,000 in Florida, whatever, So, yeah.
Yeah, no, this totally makes sense. I mean, like I said, I'm familiar with portals. When I saw what you're doing, I'm like, wow, this is really cool. I mean, and really now it's going to come down to getting good quality sponsors that are bringing the deals to the portal, right? And then with attractive offerings, whether that's somebody, and I can see a big diverse. I could see people that are doing short-term rentals, right? They're coming in, they're buying these short-term rentals. They're raising for some of the down payment and the the setup costs, and then there's just a million ways, even fix and flips, right? Like, that could be put on the portal. Pretty much every asset class. Are you accepting kind of the full food group, self-storage? I mean, you think every?
We have self-storage. I've got a meeting with a self-storage guy. who's interested in listing. I've got some short-term rental guys. You can see there's one up there coming soon on the marketplace. We got some new build as well coming, and then really want to also open this up to homeowners eventually. Because people don't realize that homeowners, they are the safest asset class in real estate because they take care of their homes mostly. And they take care of all the maintenance on their own, and they live there. So you might the returns might be lower, but it's safer, right? It's people invest in a triple net lease, for example. It's lower returns but safer. So there's different kinds of asset classes in real estate, and you want to be well diversified. There are some people who are going to take higher risk and go for the higher yields, but you want to. Modern day portfolio theory says you should have a well diversified asset. So you should be able to do that in real estate.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau Eckstein, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again. And what kind of reporting, or let's say I made a few investments, am I going to be able to go in my portal and there's going to be updates right in the portal? What's the flow going to be so we can kind of track our investments?
So we don't yet. So what happens is once you've done your investment, you're now an investor of that deal with that sponsor, not with us as the portal. We're just facilitating the investments. So and we don't actually offer the investment management piece to the sponsors. We haven't built that out. So we actually, we have some partners who, the people you might expect who do investment management really well, who we offer sponsors. If they're our clients, they get a better deal on that software. But we don't yet have the investor management piece. So you would be an investor in that deal, and your relationship would be with that sponsor.
Sure. So it would be on them, like quarterly, obviously reports and that kind of stuff.
Yeah. So whatever reporting they do, they have to do reporting once a year. They're going to RegCF once a year. They have to post their financials, and obviously, if they have if they're obligated to you to give you cash flow, they have to do that too. Whatever, they've contractually obligated, they have to do for you. But from a regulatory perspective, they have to post their financials once a year online or email them. Sure.
And then depending on what type of investment you make, if it's doing quarterly distributions or if it's kind of the exit is to be selling or flipping the property, it's a non-cash flowing type of deal.
Yeah.
Then you're going to just be in it. That's very good. And so right now you're live. You've got a couple deals in the platform, and right now you're basically building the momentum where you're going to be bringing on more and more of these opportunities.
Yeah.
And then it's probably a happy medium because you got to get enough investors so you can fill these. So then the sponsors are happy, right? Because they get subscribed to quickly.
Yeah, that's the balance which we have to figure out. We've got some exciting things coming up in relation to stories in the media and other types of things which are going to come up, which will drive traffic and will fill our deals. One thing which I'm very convinced of is that once people see these deals, they're going to want to invest in them because real estate's an attractive investment, and there's a demand for investments in real estate. The question is, how do we get eyeballs and drive traffic to the site to see the deals? One of the reasons, I'm doing press releases, and then also doing paid media. So, Facebook, Instagram, and Google advertising. And, there's some other things coming down the pike, which I think are going to be very interesting. Will drive a lot of eyeballs to our marketplace.
And is this company, is it private right now? Like you don't have, it's just bootstrapped. You don't have angel investors or anything?
We have angel investors. We actually did an angel round. There was an angel led around for us on Angel List, which we closed at the end of last year. We haven't raised anything this year, but we raised last year, we raised, close to $500,000.
So the next raise will be a Series A then?
No, the next raise will be a seed. The way this works, angel, seed, Series A.
Then, okay, got it.
So we'll do a seed round. Once we've done a couple of deals, we'll do a seed round.
Yeah. And then the seed is like 3 to 4 times X of what you raised the first go round.
Yeah.
So, and then, okay, got it. This is it. And so the key is then once you go seed, then you 3 to 4X that and you go angel, Series A, and then that's when you go, and then you can build momentum 100X, right? Like at that point, because then you have so it's very exciting time in the business. And now it's just a matter of getting, a lot of these deals closed out and performing, and then bring on new deals. So where can people learn more about the platform? Where's the best place to send them? Your website?
Invown.com, INVOWN. So it's made of 2 words, invest and own. So 2-sided marketplace, investors and owners. And so Invown.com. And yeah, I was very, very pleasantly surprised that .com was available. Because I figured, all the ones which are like Google, GOOGL, which is very, few letters.
Yeah.
They're usually taken, but Invown, no one thought of it before. So
yeah, it's unique. I when you told me, I'm like, oh, now I get it. It makes sense.
Yeah.
Yeah, that's very exciting.
So we want people to become Invowners, right? So
yeah.
If you whether you're investing, you're an Invowner. Whether you're an owner and you're putting on the marketplace to investors, you're an Invowner. So we want people to become Invowners. That's what we.
And then the smallest deals on your platform would be around 100K, like somebody buying, duplex or fourplex that they're going to flip.
We've actually got one which is going to be a minimum of 30,000 coming up. It's a mobile home park, and it's we'll wait to see it on the marketplace, but it's going to be a really good deal. It's not, you can't see it there now yet. It's not, we haven't listed it as coming soon, but it should be up there live in the next week or two. I'm hoping by the end of this week, but definitely next week it'll be live. And so that's a mobile home park, and that's the minimum they're trying to raise is 30,000, and the maximum they're going to take is 70,000. So, and the returns are pretty good.
Wow.
So smaller deals, but I think the ones with higher returns are going to end up being even smaller deals than one would think.
Yeah, it's interesting. I do commercial lending for a living.
Yeah.
And there's I get a lot of calls because a lot of people buy property in like the Midwest, right? And the problem is they can't get loans on these $30,000-$40,000 assets. This could be a solution to that for many people. They could, instead of getting a loan, they offer it as a Reg CF.
I'll take the referral if you want to offer them.
That's great. No, I was just trying to think out loud because I get this call all the time, and these people are looking for this specifically. And it's like, sorry, you're screwed. So they usually go and they buy these duplexes or single families. They fix them up a little bit. They get them so now the value is 75 or greater. They rent them out, and then they refinance into a portfolio. And they need that kind of interim money where they could. So you could structure it as like a preferred return of like almost like a So you can't do it as a loan, but you can do it as you could structure it so it's similar returns that they would be paying a hard money lender.
So what this deal actually is, it's actually a multi-million-dollar deal, the one which is coming up, but they still have some. They've closed on the deal, and they still have some membership units in the LLC which they want to sell from a round which they did previously. Mm-hmm. And they don't have much left, but they have some left. So they're going to sell on Invown.
Okay, very cool.
So it's part of a bigger deal, which they have left over in the allocation.
Very cool. Well, this is amazing. I'm glad we took the time to talk about it because I think this is going to open up, even people that are actively doing deals may want to be investors, right? To diversify, hey, let's diversify our funds into multiple products throughout multiple geographic locations throughout the U.S. Which
I got No, I was just saying I got a text from a buddy of mine who just invested in this deal, and he's like, what he says is like, personally want to thank you for enabling the rest of us to participate in real estate investment business. There's a lot of people who they're not real estate people, but they know they should be in real estate, and how do they invest? So this, so I'm hoping it opens up for those guys too.
Yeah, well, it's going to, at the end of the day, kind of what you're talking about before is that your dad, for example, a very smart guy, like probably smarter than 99% of people out there, but nobody ever opened the book of like entrepreneurship and real estate investing and cash flow. And that's the problem with a lot of the way people are brought up, is that they just never understand it, and they just don't realize that like that's how those people are not paying as much in taxes, because they have real estate, they own real estate, they depreciate, they do all this stuff. And that's that's kind of, what your movement is doing. You're in a movement to help kind of like the little fish and even the smaller sponsors that aren't ready to go out and do a huge syndication on their own. They're able now to, it's kind of like crowdfunding is peers helping other peers, right? Is essentially exactly what it is. Yeah. And what's great about it is that I can, if I like the deal, but I'm not 100% positive it's a home run deal, I can put $1,000 in it. And versus there's another deal that I like a lot, I could put 30 or 50 grand into it. Yeah. Now, is there any caps for somebody as an investor that am I limited to X amount if I'm not accredited?
Yeah, there is. It's a percentage of your income or your net worth. And you'd have to look at it as you go through to check out an investment, it will have questions about that there. But it's all, you need to, there's no one auditing you on it. So you have to do
you use a company like, you use a third party company to do that, or they have to do like a question?
No, they have to answer. We have to ask the question. They have to answer it, but no one's auditing whether they've invested more than that amount in a given year in crowdfunding. But there are rules that if people say they have invested more, then we can't take their money. So it's yourself. The question's asked, and you answer it yourself. We don't verify the answer, but if you've invested more than a certain amount related to your net worth, then we can't technically take your money.
Can one of my business entities be?
Yes.
So I can do it personally, or I could do it through a business entity that I have, because I have several companies. Like if I want to diversify some of my.
Yeah.
Okay.
Yeah. You can, or as a trust, you can do it jointly with somebody else.
Got it. So what's the goal over the next 12 months as far as transactions you'd like to see through the platform? I mean, it's probably going to like year 1 versus like year 5 is going to be like, what would you anticipate the deal flow?
So my goal for the next year is to build the marketplace where it has liquidity, which means any deal which comes in will, if it's a good deal, I mean, we're not going to put stuff up which we think are bad deals for investors, but if it's a decent deal for investors, we'll get funded. That's the goal. So I don't want to give a number necessarily to how many we're going to do. We want to make sure there's liquidity on the marketplace, that people bring up the deals, they show up, they get funded. That people, so there's that.
Yeah, that's the important thing starting, right? Like the deals move, they flow, then you have case studies, and then, then year 2, year 3 is just kind of a scale, and then probably year 3, 4 is like probably the big quantum growth years.
Yeah, when you see the network effects will build on themselves because it's a network effect business. So once you have the network effect going, and you need that flywheel to start rolling, which is what we're trying to kick off now. We've got some exciting things in action to get that going. But once we get that going, I mean, the numbers get very big, very fast.
Yeah, no, this is great. This is exciting. You must have trouble sleeping because you're thinking about this.
I'm excited and petrified at the same time because, there's mainly because, whenever you take investor money, and it's a startup, it's speculative. The responsibility I feel towards the investors who put money in here, and they're all accredited and they could all, but the point is, like, I've taken other people's money to build this. So I feel a tremendous responsibility towards that. And, so I'm incredibly excited, but also, doing everything I can to make sure that this is going to do what we think it's going to do. So.
Yeah, well, this is great. We'd love to have you back on the show in a few months, and I'm going to go in and do some investing on some of these deals. So maybe I'll bring some deals too, because I'd
love that.
I buy some deals occasionally, so it would be interesting to be on both sides of the fence, right?
Yeah, I'd love that. Yeah, so I'm grateful for you having me on the podcast.
Yeah, no, it was my pleasure, and thank you so much. I hope everybody out there enjoyed this episode. We haven't talked about crowdfunding portals, and I think this was an appropriate time to get out there and start looking around. I've been really exploring different avenues to diversify my funds, and this is like another thing that, hey, even if you're not completely into real estate, that you should get on a platform like this and start looking at the deals, and then figure out, and maybe you get in and start with $1,000, okay, and diversify your money instead of it sitting in your 401k and not doing probably that much for you, or maybe losing your money. You might want to diversify and get into real estate slowly this way, as opposed to going out and buying your own investment property and needing hundreds or $200,000. You can start very small this way, so I like it. Yeah, get people's feet wet, get it in the water. And then there's people that do deals that think it's a great model, and they're have some extra capital and they're not doing anything with it. They can throw 5, 10, 20, 30 grand at a deal. So just a really good opportunity, and it'll be interesting to see the creative deals that come onto the platform. That's also fun to see what people are doing and where they're buying, and their value plays on these type of real estate. So hope you guys enjoy this episode. We'll see you on the next show.